Everyone. Hello, Alison, and hello, whoever is watching us live or from the recording. We have set up this webinar because originally, when we started to speak to talking for hours, and we couldn't run out of the good subjects. So we thought that this could be interesting for more people than just two of us, and maybe discuss a couple of things in front of the open public, because Alison has a very unique special skill regarding the technology in payments. And me, I'm the founder of the Soltesz Institute, which is all about education and bringing awareness of the payment and banking issues. So we thought that we are setting up this webinar for you, where we are having this initial chat discussion and different subjects, and hope we can bring some value for your entertainment, but also information as well. So hello, Alison, lovely to see you.
Hi, Victoria. Thanks for having me. Hi, everyone. I'm happy to be here. Excited to have I guess, out large geek out payment sector talk with Victoria. It's going to be exciting, and I hope to see some comments and questions in there as well, so we can answer those.
Definitely. So tell me a little bit more that you told me at the initial call that you started this amazing company. It's all about payment data. So it would be good to then you explain a bit more about you and then about me, and then we can just discuss all the questions as they come.
Awesome. Yeah. So my background is a little bit different, I think, from a lot of people in the payment space. My background is really in vertical software. So vertical software that serves a specific industry. And that has embedded payments into their infrastructure, so that it's a core component in terms of user experience, and also tends to be a core component in terms of technology, in terms of just contract negotiations with processors. And I sat on the kind of business side of it within that. So I spoke a lot to different processors, and realized really how complicated the payment space was. Again, it was such a core component to our software, but it wasn't something that I knew very well at the time. Definitely got very immersed in it since then. But it shocked me how important it was for consumers, for small and medium-sized businesses, for the software itself. So really across the chain. But how complicated payment data was, how complicated contracts were, how complicated the technology was, all that out within where you want to go as a company. To me and my co-founder, it was just feeling like there had to be a better way to serve the industry, and helping them understand payments, helping them understand the data that comes in and how they can leverage that data to make better choices in terms of company growth, optimization, all of that kind of fun detail. So it's a little bit about why we got into flexible, and a bit about what we do. There's also kind of that more boring component to it that's really payment reconciliation. That's also a pain point that we felt a lot within the software. And I think that really multiple people feel across the board, whether you're, an SMB working and you have different payment processors that you're using, or you're a larger software company. And I even think payment processors feel it themselves almost. So yeah, that's a little bit of what we do. How about you, Victoria?
Exactly, and I can relate in so many aspects because I started as an accountant. So I was the one who was doing the manual reconciliation, and somehow I don't know what was. Maybe it was the old time and the technology was not that developed, but there was always some discrepancy, right? And you spend hours and hours to figure out that which is that one little payment of like $10, which is showing in one statement, but it doesn't show in your record. That it was an absolute nightmare. And as you said, that there are a lot of confusions and misconceptions in payments and banking, and that's one of the reasons that I started PSP Angels, which is payment and banking consultancy. Because, as I said, I was an accountant, and people came to me asking for where to open a bank account, how to do the payments, why the bank is asking questions. And it seems like that even today, not that many people actually understand what payment is about. And it's payment it's one side of the equation, but how payment is related then to every part of the organization, because it comes from banking. It affects, how the banking uses compliance to filter out all of these creative players, and why you are restricted to do certain things just because, a couple of years ago, someone wanted to outsmart the system. And that's why there is a specific regulation against people like you.
Yeah.
And yeah, that's super interesting, and that's what I thought that that will be a really good conversation here today, because there are so many real life cases where clients are really suffering. Online merchants don't even plan for payments; they just start a business as we do. I'm going to pay that fee for a legal consultant. I will figure it out on my own. And they approach payments and banking in the same way. And it can cost a lot of money on the long term of not having the right plan in place, right? Because everything is going more and more international. Companies are going new territories and new markets. And my job
Absolutely.
is to help them to, or you want to go to New Zealand because there is a good client base, right? Do you know anyone there? Do you know who to trust your money? Do you know how that payment provider or bank is going to handle your money or send the money? How are you
Yeah.
going to do the exchange, or how do you do the due diligence that you want to give of your money to that payment provider? And of course, when it comes to technology and the integrations and the data security and everything else, it just adds an extra layer of difficulty to the stuff, right?
Absolutely, because there's different regulations on different territories. There's different processors that you might want to go with on different territories. People are not buying in the same way on different territories. So there's absolutely an impact for whatever company who's opening new places and what they should be choosing in terms of technology, and how they should be forecasting their growth, I think, as well. We had a company that we work with that opened up in Italy. They already have a few territories in Europe as well as Canada. And they weren't sure what they should be expecting in terms of what they should, how people were going to pay over there, what the demographic was going to look like. Should be looking at just a processor that was working only in Italy and locally, versus going with a more global offer like something like Stripe. And there was a real debate for them as to whether what they should go with. And I think that comes down to the size of the company and a bit of your strategy and the tech resources, like you were saying, that you need to place behind it, because that can be wildly different too.
Yeah, exactly. And many times that, for example, the person who needs to make a decision of that within that company doesn't even know about that they should start the questioning. So, for example, we had this client who said that we are entering in the new territories, right? We are targeting Latin America. Great. But you only have a card provider. How many people in this target area is actually using cards? So if you're going with this current setup, you can spend all the marketing budget in the world, but if the clients are still going on your website, putting the things in the basket and trying to check out, and they can't pay you, all the marketing went down the drain. But you tell me how many clients are actually, how many online businesses start to talk to payments or finance before they release the marketing budget? It's just, it's not really a viable step of like opening a new target market, then do the marketing, then do the pilot, and then we find how the clients can pay us. And this is just, one of those examples, right?
Yeah, absolutely. And I think that ties into when you're opening up new markets, how you should be pricing within your company, those different strategies of the products you're offering. And the transaction itself is something that we see, typically kind of an ease of going at it. I'll charge a flat rate across everything that I offer across my different territories, no matter what. But that's, not really always something that should be the case, because we see it with our clients who even operate just within North America. People who are buying within New York City versus people who are buying within, upstate New York are purchasing things vastly differently. You have New York City where they're buying with corporate cards or Amex or Prestige cards. So that's, costing you a lot more than upstate New York, where it's a debit transaction. And I think there's very little for companies to have visibility, and not only to have visibility, but then know what to do with it. Like, okay, how could I change the strategy? And if I change the strategy, how do I do it? How do I market it, as to what you were saying? I think those are kind of key components that are not really educated on in the market, and people could use more transparency and visibility on.
True, true. Because it also as what kind of payment methods that you use as a company to collect payments. Because there is obviously one which is a card, which in my opinion one of the most expensive ones. But then there are wallets, and there are open banking, and there are bank wires, and there are gift
Yeah.
cards, and there is crypto, and there's different fees. But even if you're integrating multiple payment service providers and banks to the mix, sometimes even then it can be really confusing of, okay, wait, how much do I pay to who? And you need those numbers in front of you to make the informative decisions that, all right, my traffic, let's say it's, I don't know, 50,000 per month. Then I channel 30,000 to this provider. And as a backup, there is 20,000 to that provider. But if I change it to a different payment method, how does it affect the fees? Obviously, the risk, obviously, user experience, and all other ones. So I guess this is all you're dealing with, right? Right, collecting all that data for making better decisions, right?
Exactly. And you touched on all the points. I mean, again, what payment methods, what territories, what even segment of client, right? We work with a lot of software companies who will be working across different types of segments of clients. And even like their average transaction size could be different, meaning that their payment methods could be different, or, they're further along in their embedded payments journey, and they've started to add subscriptions as a way of paying and installments as a way of paying, and these are all things that do impact which provider you should be doing and the type of data that you should be looking at as well, for sure.
Exactly. And then, on top of that, everything is changing all the time, right? So then your company is also evolving, your volume grows, then you've got different customer habits. You, as you said, people from upstate New York are spending with different payment methods. You need to always adjust the strategy and everything. But for the optimal performance and to make sure that you did everything, then you will need sooner or later a tool, because that's one thing that you've got good advisors and planning everything, but it's a whole different story when you can actually evaluate, if I'm decision one, how does it affect my bottom line, and see if all the data in front of you, right?
Yeah, and I think there's different kind of journeys to that depending on the size of the company and kind of where you are in your journey of payments. I think for, a startup or somebody who's just thinking, hey, I want to add, a way to check out or a way to pay within my software. And I think this could be a good solution. I think this would increase customer experience. I think I have something good here. I think that those companies have a set of decision criteria versus somebody who's gone to market with embedded payments already, operating on a specific territory, and maybe has it more within their strategic long-term vision, like it's a core component of their software. And they plan to maybe even do beyond payments and do embedded finance. So go into like a loaning or go into issuing cards. I think that all these subsets, I guess, of criteria that could go from and where you are within your kind of, let's call it embedded finance journey. I think those lead to different type of things that you're going to be looking at. From different, like, the ease of technology, how embedded you can put in the technology, right? Like, we see orchestration coming up very often now. We see payfacs more and more often, especially, as you were saying, if you're embedding and putting in different card payment methods, that also leads to what providers you want to be looking at. So I think there's a lot of different components that you need to look at, but it truly depends on where you are within that journey and the investment you want to put into it.
Yeah, I agree completely. Yeah, because payment orchestration, I think at one point it really shows that the market needs something which is optimizing this chaos completely. And then there are different providers who are trying to optimize it somehow. Okay, that at least there is a differentiation in fees, there is a cascading, there is something that you can control the outcome better with using different multiple providers. But still, I think payment orchestration is still just one step, and that a lot of merchants realize that payment orchestration is is an amazing tool, and yes, you need to do it, but there are so many other aspects other than the fees, other than the the acceptance rates, because not every payment service provider is equal. One is settling
No.
you every day, one is settling you every week, one is in the US, one is, I don't know, somewhere in a countries I've never heard of, right? So in case that they don't pick up the phone or they don't reply to my email, where am I going to go and get my money back?
Yep.
So different risk levels and different timelines, but also in a way as different. I had a client who's coming to us to optimize the payments and banking strategy. So we did, and he was really focused on the price. So he's okay. Give me something which is the cheapest, because obviously I want to maximize my profit. And we found him a payment provider was almost basically no cost. It was super cheap, but it would have taken him, I think, 3 months of hardcore development of the integration technologically, which increased the prices so much. And then,
For sure.
testing and bug finding and for example, that payments that didn't even have an API. Was true. That's why they were so cheap.
That happens.
So
That happens a lot, Victoria.
exactly. So then payments and banking might not even understand that how complex this issue and how many areas the business is affected by it.
Absolutely. And on the maintenance level afterwards too, like, yeah, there's the upfront integration, like you were saying, for 3 months, but after that, there's still maintenance that needs to be done to keep that integration good, to make sure that you're catching any bugs that might come up. Because for sure, if like what you're saying, if it's an older infrastructure type payment processor, there might be more maintenance that you need to do on your end as a software to be able to catch those. And then going back to like the way beginning of the conversation, there's the whole reconciliation piece behind that. Because if there is no reporting API, if they don't offer that in terms of the payment processor, in terms of options to help with reconciliation, that in itself becomes a challenge. And then you're adding support onto that as well. So I think that those are definitely things that software companies need to think about when you're integrating payments.
Definitely. Why do you think that there are all these different type of payment service providers and alternative methods, and everybody's trying to innovate, and poor little merchants are getting lost in the forest? Why do you think that there is still a need, and the market thinks that there could be even more demand for different ways and different products and different financial approach, and that's why all these payment service providers just popping up like mushrooms?
I personally think that the industry has changed quite a bit. I think that with the evolution of vertical platforms from what we see. So if you're, let's say you're a software that serves veterinary clinics. Instead of that veterinary clinic going to shop to a payment processor directly to get rates, I think they're looking now for the platforms out there that are going to help run their business and are going to include payments within it. And potentially more than just payments, like you were saying before. It could include more than, issuing of a card or loaning to these specific type businesses. And I think that evolution is, and I mean, just the way that people are buying and the shift to online and the addition of new payment methods. I think all these concurrent kind of shifts within the market has kind of made it that there are now new players coming out. Obviously, the older players are still there, but I also think that that's what causes so many different layerings within the payment industry that makes it even more complex. Is that you're talking to multiple different processors who might have just slight differences in what they're doing, or slightly different marketing approaches to what they're doing to cater to a specific industry that's out there. But I do think that there's been in my opinion, again, a shift in the way that small and medium-sized businesses are shopping for payment and the processing of payments. They're looking more for fully catered solutions to their businesses that are beyond just payment processing, that will have their CRM that's for their type of business, and that will have the reconciliation components in that software, so that they're shopping for a software that has everything that they need to run their business versus, piecemealing different solutions together.
Yeah, this patchwork solution could work if you know what you are doing, but unfortunately, yeah, the majority of the merchants have a million other things to do, and this is true because I see it
Yeah.
in my practice as well. That everybody thinks that there is a big money in payments, and I am getting approached almost on a daily that the clients tell me that, okay, how much would it be that if I want to be my own payment provider because I don't trust them, it's going to be easier, and then the licensing issues come up. So I think that there is still somewhat, even though that there are so many players in the field, they are offering different services and different fees, that it looks like that still doesn't consolidate into one ultimate which could cater for everyone. And that's what I'm thinking, that the bigger companies, the bigger tech companies, there is a reason why everybody started to pay attention on payments. Like everybody started to do their own payments, the Amazon Pay, the Apple Pay, and there is a good opportunity there because you are trying to cash out on your existing client base of introducing payments to them when you already know that they will be forced to use that payment method, or it's easier, or it's already there. So that's what I see. But that could mean a big shift in powers. I think very shortly with the smaller payment platforms, which then now by these larger technological companies who can actually come in and hoover up with their new services. But still, must be some I don't know, like simpler and more fee structures that just going to a provider and then ask for their fees and ask for their terms and conditions, and then sit down and manually make sense out of that, right? So that's also part of the payment data, I believe, right?
Yeah, definitely. That's
Evaluation.
part of some of the challenge that we try to help our customers with. That's to your point. I think that there is so much more than just looking at fees when you're going to
Mhm.
choose a payment provider for sure. But obviously, fees are part of it. And I think ultimately what we see is, let's say companies have narrowed to their top two choices of who they want to go with. And I'm mostly speaking here of companies who have been processing payments for a while and who are looking to open up new territories and new offerings, and are looking to add other solutions, other processors to the mix. And what I think is often very challenging is none of the contracts look the same. None of the fee structures look the same. It's very hard for these technology companies to compare apples to apples because you're looking at apple, kiwis, and bananas. So I think that that's a real challenge that they have. And then knowing, how do I go to, I've made this choice. How do I then go to market with that choice?
Mm.
Some of the things that we do, because we aggregate already a ton of data from our technology companies, we help them map out, okay, if you're looking at processor A and B, well, we already have your data that you've processed for X amount of time. Let's map that out. Let's look at that contract and actually project what it can look like with these processor A and processor
Mm.
B. So you know how you could be forecasting and budgeting for the next year. And then layering on to that is, typically when you're choosing to add another processor, you're not going to be looking at, okay, I'm going to switch everything from one to the other. That's not really, one, the
Yeah.
point, and two, you want to be doing it in a more structured manner. So we help them understand, okay, year over year, you're averaging this many new merchants, let's say in your portfolio, in this certain territory or segment of the market. Let's map that out to see what it looks like for you. And do you meet the thresholds of this new contract that they've put forward? So it gives them, again, I think, technology companies a little more decision power and being able to, again, budget, forecast, and really have a clear idea of their current year and next year's to come, and what strategic decisions they should be making within the company
I
and who to
agree.
go with.
I agree. Actually, I once had a client who was really doing everything right, and we set up their whole and banking strategy. But I felt like that they are really afraid of rocking the boat and adding to the existing technology, because it's something that if you are not a tech company, that could be very confusing. And for me as an accountant, technology could be very complicated because you can't really forecast the exact fees and times and efforts that you need to do, because then there could be a bug, then there could be some issues coming out with the testing. What the salespeople are selling could be completely different than when the payment processors actually start to work. So what I really see that though, that nowadays all financial companies become fintech companies, the users might not be that tech savvy to actually be able to use those benefits to the fullest. I'm still seeing a lot of huge companies who opened a bank account 20 years ago, and they still use that without renegotiating the fees, or even asking questions about the new technological innovations. They are running, I mean, the whole financial world, I think, I think it's still running on sheets, even though that we might have the good tools.
Yeah.
Not that many are using it. Yes, there are some really good technology companies who are at the forefront, but when we are talking about the average company, the average medium-sized businesses, it could be really challenging for them to even optimize for the technological. Well, meanwhile, think about the fees. Meanwhile, think about if I'm doing the right thing in terms of risks, and then do the payment orchestration as it should be. So that's why I think it was a really good find that we started this partnership, because there are not that many technologically, which is basically translating what we are advocating for. We advocate for
Yeah.
planning and make the right decisions based on all the information which is in front of you, and somehow this, your company is putting everything in understanding, whereby people can make informed decisions based on the payment data. And it's something that it takes so much to integrate, and it doesn't really break the whole system just to add the new layer of difficulty to it. So that's what I thought, that it's an interesting approach what you guys are doing here, because it is indeed the payment consultancy and the banking consultancy, but from the technological language. So
Yeah, and
it's
I mean,
fine.
for us, it really came down to honestly payment data being so complex, and again, there
Mhm.
you're being so many different structures to it, and simplifying that and aggregating it in a fashion that payment is a mess that it is, that companies can actually make, that they
Yeah.
can actually make decisions, and again have a clear and more transparent view of their current state, and where they want to go with it. We were talking before. You had mentioned, when we were talking about reconciliation, and how there was always this $10 that you couldn't find somewhere, often in some transaction, and what it meant. And what we see as well is we do transaction matching. So let's say the technology company and the processor will help them transaction match, and ensure that there's consistency between both. And that's something that isn't done very often, I believe. And there's often issues on the software side where they will have happened, where it'll flag it, and there'll be a missing transaction, whether that's due to refunds, a payment being retried, and all of that fun stuff.
Well, that fraud prevention measures might actually just hitting all the wrong ones, and that's one thing to implement something which is filtering out the fraud, but fine tuning to make the right alerts and filter out the right ones, and not to be the hinder of the growth operational wise. It's a whole different problem, because we had a client who was using everything right, but the fraud protection measure was really losing a lot of money for him, and our biggest challenge was actually fine tuning the system in a way that don't filter out the client just because poor client is, let's say, he's a German person and having a holiday in Spain and trying to pay for something, and
Mm.
because the country doesn't match, the whole payment is getting blocked. There could be explanations why certain payments are going through, when you don't just need to reject everything. Or, for example, how many times we see, mainly in high risk, when the payment provider automatically pays back, issues a full chargeback for a dispute without even asking the right questions. And I was surprised just to see that there are some merchants where this is an absolute normal. They talk about that, yes, in my industry the chargeback rate is 5% and that's normal. And no, it's not normal. How would it be normal? Just because you have maybe online education or these kind of marketplaces where the quality of the goods could be worse, it doesn't mean that you have to just swallow every single chargeback. There are different tools, there are different ways how to find them, and you don't need to just blindly accept everything and take it as something that you cannot change. And that's what I think, that's when it becomes very apparent that you need to educate the merchants, and it's so little information that you can find online. Of course, people are contacting you, discussing the problems with you, and then you're offering a solution. But there are so many different providers who are offering different solutions for the same problem, and how to filter out who is right, who is wrong, who wants me to actually flourish and not just give me the sales talk. So that's why I feel like that payments and banking is now an independent industry on its own. You can't just ask an accountant to take care of it, because I'm an accountant. We were never trained
Right.
on technical stuff. I didn't know what is chargeback, for example, or you can't ask a legal person to draft your whole KYC and AML procedure and then deal with your payments too, because why would they know anything about payments? So what I can see now is that mainly in larger organizations, the payment department is the forced work together with different people from different background, where the communication, again, it could be completely different. So there is a technical person who is integrating or not, or delaying, or the data security and the whole technology setup. There's an accountant who is doing the budgeting, and then there might be some compliance person as well, who is overseeing everything from a legal perspective. And the communication and the work together on this it could be very confusing. So the payments and banking should be treated as an independent function of the operation, as an independent unit, and treat it as such, and be educated on that, because it's so easy to make a mistake, and the larger the organization, the worst making that mistake is, because it costs more. So that's
In
why
that
they're talking about this. Yeah.
In that respect, Victoria, do you think that there should be kind of different stages at which a company should be looking for monitoring these types of things, like their banking strategy, their payment strategy? Do you think there's different benchmarks that mean that they should go and get a view and make sure that they're still on track?
Definitely, because we see a lot of startup companies that they think that whatever payment provider or bank or any kind of strategy that they set up at the start is going to last them forever. No. As a startup, you start with a hiccup immediately from a banking perspective, because startups are broke. I don't trust that you're gonna fulfill all your dreams and hopes and financial projections that you put in front of me. Then startups are changing so quickly that they usually forget to alert the bank or the payment provider that, oh, by the way, we are no longer doing that, but we are having a completely different activity, which is a compliance nightmare. Also, startups are somewhat, it's iffy, because I don't want to be the first one that you're testing your operation at, but maybe you catch up or maybe not. So it's a big gamble. So whoever is accepting startups and specialized on startups, helping them to grow and scale up, that is a completely different bank and payment provider when it comes up to a company which is now having, for example, 1,000 employees, and there are different functions for different part of the business. So yes, there is an important part of the banking and payment strategy setup, but you also need to understand that whatever you are using as of today, it might be completely the worst decision tomorrow, because your company is changing, your volumes are changing, your target market is changing, but then your payment providers are changing. They have a different risk appetite, they have different fees. And on top of that, the world is changing. Clients like to pay differently. There are new technological innovations. You can't run your whole company on Excel anymore. You need to use the tools. You need to integrate those somehow to your CRM system, and you need to understand and get data from payments as well. And it's no longer just the data what you're getting from, for example, sales or marketing, or the data from the visitors of your website, but as you said, the payment data should be a very vital and important element for the operation as a whole to make the good decisions for every aspect of the organization, which includes HR, which includes growth, which includes basically every area of the business. So it's super important, in my opinion.
I would completely agree on all
Yeah.
those fronts. I think, again, when you're starting up, it's a very different game than when you have a whole team set for it. Doesn't mean you shouldn't be reassessing where you are within the business and what you should be doing. But definitely there's different parts that you should be looking at for sure.
That's right. And we got some questions actually here from the audience.
Nice.
So Jacob is asking us that, could you walk us through the value and benefit for orchestration for vertically integrated software providers? I think it's for you, Alison.
I
Vertically
think it's,
integrated software providers.
yes, something I know well. Yeah, Jacob, I mean, very good question. Again, I think it comes back a little bit to where they sit within their journey of payments. I think there's a big part of, at least in my mind, in terms of orchestration, that can help on different fronts. One being, you know, bringing transactions to different processors based on territory, based on the type of clients they serve. I think that those are key important factors as to why you might want to send transactions to different places. I and I mean, again, obviously, there's the portion of fees and where they might be getting better rates based on their type of clients and based on their verticals and based on the payment methods being used. So I think that those are kind of the biggest reasons. I think ownership of the transaction as well would play a part of it. Being the one that I think at that point, vertically integrated software providers would be the ones that have a little more say in the matter. If they're integrated with one processor or two processors to some degree, they might be limiting their options in terms of where they can send, whereas an orchestration platform obviously gives them a bit more openness and I think more ownership on that data as well. Hopefully that answers that question.
Yeah.
But send me a follow-up if you think there's something else.
And I think that the biggest benefit of the market started to even talk about the orchestration is to recognize that there is need for different payment providers for different markets, for taking advantage for different fees, and there is no payment provider which is going to be the ultimate one, and that's the only thing that you integrate and life is good. But you need to orchestrate. You need to know what are you sacrificing in terms of getting what kind of benefits out of it. And the other thing, what I see, it's a really good benefit of orchestration is that it forces you to have a backup. And that is so important because I've seen so many big companies and usually high risk companies know that because the payment providers come and go and there's always some issues around the payment somehow with high risk. But low risk clients who get used to walking in the bank, open a bank account and never look back, these clients have a serious difficulty to understand that no, don't keep 10 million with one payment provider, and no, don't trust that the technology will always serve you and there's not going to be any hiccups or any kind of downtime. You need to have a plan B and C and D, and the larger the volume, the more attention you need to pay for these providers. And somehow it's contradicting with what the provider wants, right? Because if I'm a provider, I want all your volume. Give me all your volume, and then give me all the millions because then I give you better fees. So somehow merchants are still falling for this, and I don't blame them, because why would they know that if I'm increasing my volume with one payment provider, I'm just getting better fees on that, and then I can actually rely more on a single point of failure with that payment provider. And this is very hard to advocate against, because somehow there is a clashing of interest here on the market somehow.
Yeah, and I think that, that's an interesting point when we're talking about it not just being about fees, but if again, I go back to an issue I had with being in the vertical SaaS space. Reconciliation was a tough challenge that we had to solve. But had there been an option with a processor who had a solution regarding reconciliation that we could have embedded or that we could have used, obviously that would have been something that would have been interesting to us, and maybe it's something that software would be willing to pay more for, because it means better adoption for them. It means more satisfied clients for them and a better experience. So I think, again, fees are a part of it, but there's definitely solutions out there that make it so that if it's a better experience for the merchant and for the software provider and the user at the end of the day, those are things that will greatly, I think, influence choices at the end of the day.
Exactly. And also, you touched on a very important point, because user experience is such an important element that so many people tend to forget, because you can actually affect your customer behavior, and you can motivate them to use one or another payment provider, which is better for you as a company. And so many companies are missing out on that. So if I'm encouraging you that, hey, try to pay with whatever Visa other than bank wires, because then I might get my money quicker, or whatever reason, maybe the client doesn't even understand what is it for them, but just see all the benefits of that. But you can actually optimize so much cost and risk with that as a business, and so many companies are just simply missing out on that because they don't know. And if you don't know what you don't know what you don't know, right? So
of course, you can't change what you don't know too. You can't adapt. You can't make, again, those strategic decisions if you don't have the information to do it, for sure.
Exactly. And Adam is asking us here that what have you seen as the largest gap in understanding payments? And would love to hear from both of you. So what have you seen, Alison, as the largest gap in understanding payments?
Oh boy. I don't know about the largest. I feel like I've seen a lot of gaps. I think the biggest gap is maybe just the education that's needed in order to understand what you can do with your payment data. How one, at least in the companies that we work, there's so much data that they've tried to aggregate it in many different ways, but it's not like something that you can aggregate on Excel. So one, bringing all that mess together and then aggregating it in a way that you can actually see something and make sense of it, and make decisions based on it, I think is a big challenge. But even taking a step back from that, I think that because payments is such a complex industry with so many different layers to it, I think that sometimes, at least the vertical SaaS in the space that we work with the most, don't always know what they should be looking for in terms of the data. I think is the biggest thing. They know they have a massive it. I think they know that they could structure it in a way that there could be potential. But what are the things that they should be looking for are, I think, what's a big gap. And by that, I mean, like, okay, I'm looking at my highest performers and my lowest performers, and what can I gain from both of those different things? What are the transaction outliers that I should be looking at? If some transactions are costing me way more than others, why is that? Should I be looking to it? And acceptance rates, if my acceptance rates are all over the place, well, is there a reason for that? What should I be looking for? And then I think all those little nuances are for sure gaps, but I think the biggest gap is, what should I be looking for and what should I do with it?
Agreed. And I think the biggest gap is really about the basis of the knowledge, because so many payment experts, or even someone who's like myself, an accountant, we were never trained on payments. We get the information out of various sources, like the forums, or talking to someone who is in the same position in a different company over a coffee on an expo, just to get some information. Is just just a lack of basic education overall for the companies. Unfortunately, that's really, I feel like that's where we should start. What is ACH? What is card? What is acquirer? What is a bank, right? Or how the
Oh my God,
payment is
yeah.
moving from one account to another, or what is compliance? Why you cannot just incorporate a different company in offshore and cheat all your taxes. So the basic is somewhat missing, which is then resulting into the everyday decisions of the clients, because you would be surprised, so many big companies are bleeding out on the basics. And if
Yeah.
we tackle those, then it's going to be much easier to explain to them that yes, how to look for the data, because as you said, you don't know what you don't know. If you don't know what to look for the data because you don't even know there is a data, or there could be any kind of information get out of the data, that's where the problem actually starts. So
Yeah. To give you a kind of example and to further on your point, Victoria, we worked with a client who was in the nonprofit world. So they provided a software to nonprofits. And they had no idea that, at least US and Canada, that means that you can qualify for lower interchange. The merchants could qualify for lower
yeah,
interchange because they're nonprofits. And this software company had no idea that that was the case. So I
why
think
would
that that's just an eye opening of like, that's fairly common knowledge, I would say, across the industry, vertical SaaS or payments. And I think that that's kind of goes to show the gap that exists,
exactly?
and the education needed.
Jacob has another question for you. Actually, Stripe Connect is the product I see most leveraged out there in your space, Alison. What other options should we be aware of?
Oh boy, I think there are a ton of options that we could be aware of. Stripe is obviously something that we see very often as well. I think that there's a reason for that. They've definitely, I think they've changed the game a little bit if we're going back to what payments or payment processors was to what it is now. I think they were the first ones to change the game and kind of really leverage good technologies to help tech companies out. I think that's why a lot of startups will go to them. But that's certainly not the only option that's out there. I think there's some big, there's some big ones in the space that are coming out that are very vertical SaaS specific, for sure. And yeah, I'm happy to, if you guys have more questions on a one-to-one and want some options about who to go to, I'm happy to help. It's not necessarily my specialty, and you definitely should be researching based on a company strategy, but I can definitely help.
Yeah. Well, it's great. I think time flies when you have fun, right? When we are
Yeah.
discussing all different kind of issues and aspects. So I think we can conclude that this webinar was absolutely amazing. At least I learned a lot, and I am a proclaimed expert, but there's so much to talk about, and there's so many aspects that you always learn. So that's why it's important that we have these kind of spaces when we can discuss these parts. So whoever would like to have further discussions or reach out to us one-to-one, please do so, because that's how we create awareness of the existence of the industry, of the problems, and that's how we can find solutions of these problems together as an industry. So I think it was absolutely amazing, and I can't thank you enough to have me on this webinar, Alison, and it's absolutely great that we have discussed all these subjects. I think more to come. I think we could talk for ages and hours and hours. If anyone has any other questions, please shoot it now, and let's see that maybe in the future we can have more of these talks.
Yeah, definitely. Thanks a lot, Victoria. It was a lot of fun. I love these payment geek out sessions. If anybody is, wanting to chat more too, definitely reach out. They're always fun to have. And there's always, like you said, Victoria, so much to learn. It's like a never ending process to the different, tentacles of payments as well. And just the financial background, the financial embedded space, banking space, which is definitely one that I wish I knew more of, Victoria. So we'll have to have a one-on-one session so you can give me a deep dive there.
Definitely, that I will. And thank you very much who was with us today. And thank you for everyone who is watching us from the recording. Thank you, and hope to see you soon.
Thanks, everyone. Take care.
Bye, bye, bye.